The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now. What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for the Spider S&P 500 ETF Trust with the ticker symbol SPY. If you want a chart analysis guaranteed to be done, please read the description below. Also, take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see in the daily chart and finish the video off with the weekly chart. So if you guys are liking my weekly SPY recaps, I'm pretty sure you will love my daily SPY recaps on my membership. Link in the video description below, and in the comments I go over the day's analysis and where we could possibly be going in the short term in my Discord channel. So if you guys are interested in hearing about that, you can join below. And I also do bonus content such as I go over Bitcoin, gold, silver's charts. I look over specific member stock requests every Thursday. So there's a lot of stuff included in that package deal. So let's go over the SPY on the daily chart. So I believe last week I was expecting some type of bounce, and that's what occurred because we saw two legs down. So Monday we gapped down, but it was a bounce. Prices bounced higher, and the reason for that was this measure move target was reached. You can see that prices made one impulse down, and it made a second impulse down. So after the second impulse, we can expect a bounce up. Right at the tip of this arrow, we got that bounce, and then what occurred was that prices bounced up in a form of two legs. So I did tell my members about that. We can get a move up. If we see a pullback, we could be in the formation of the second leg after this higher low. That's exactly what happened. So you can see that if I move this little big arrow out of the way, prices were coming back toward this EMA in the form of two legs. So we had one impulse higher, we pulled back, then we had the second impulse higher. Market moves in twos. On any time frame, on multiple structures, you see I had the more macro structure getting two legs, then we have this little micro structure getting two legs. So again, something to keep an eye on. So now we had two legs up, and you can see that Friday was a inside bar, which is indecision because it's inside of the previous bar. You can see how it's much smaller than the previous one. So this is showing that we could start getting stacked up, maybe something like this, because we had those two large legs down, we had those two legs up. So traders are wondering now, are we going to make another really large leg down, maybe something like this? Or are we going to see another leg higher before possibly seeing another leg down? So either way, I'm probably going to be expecting another move down lower, but I'm just not sure, and other traders are not sure if we're going to get that right now, or we're going to probably see another correction higher. Most likely, we'll probably get another correction higher and then the move down, but most traders don't want to do their trading based on just that little uncertainty. They want to be more confident, so we can still get that move up. So they don't want to get trapped going short early. So I think that's what traders are waiting for. They're waiting for that short opportunity. If we get a second leg up and we see failure to the upside, they're going to be expecting this huge leg down right over here. So that is probably very possible to occur. Now, the macro pattern can help us figure out where the market is headed most likely. So this is the macro structure, basically just a range for pretty much a year now. You can see it started back here in May of 2022, and you can see that we're trading at the same price level as in May 12th of 2022. So 1 year of just sideways price action. Obviously it's volatile because you can see these large swings up and down, but again, there is a downward bias to this because we had a huge move down right here, and then we had two legs of correction. This is the first leg, and this is the second leg. Prices did not reach the measure move target on the second attempt, so that shows signs of weakness for the bulls. So we can expect this possible measured leg for the bears to be complete, or at least attempted towards their downside to the 334 level. So there's quite a bit of ways to drop. So me personally, I would be expecting a long trap to occur to enter short to reach this measure move target. And if this is the range, since we hit the highs, we can hit the lows. So I'm looking at the structure, I'm looking at where prices can potentially go. Then I'm waiting for longs to get trapped, expecting price to go higher, but me looking at the entire picture, expecting price to go lower. So We'll see if that occurs. I'm expecting a break higher, and expecting that break higher to fail, to go short. Let's just say, obviously that's invalidated. Maybe we don't get that short setup. Maybe we just continue rocketing higher. So that's the thing about the market. People expect these guarantees to occur, but it doesn't. If we just start rocketing higher, then traders are going to switch the gears and look for longs. I mean, that's just how it works. Traders don't care if the market goes up or the market goes down. They just want the market to move. I mean, most obviously investors or super long-term traders, they want the market to up because they're buy and hold traders. But other traders, they're day traders, swing traders in the daily, weekly time frames. They get in and out. They don't care if the market goes up or down. They're gonna just take their position. So if we don't get that short setup, they're gonna be like, okay, I'm gonna look for a long. I mean, that's just how simple it is. But right now, I think most traders, professional traders, are gonna be looking for a short setup to go down towards this measurable target. Not guaranteed to obviously set up or occur, but that's what they're expecting. We can just get that drop right now, but that's probably unlikely because those 2 legs down. So I'm expecting a bigger pullback for price to drop down lower. So that's how I'm looking at the chart. Someone else might be looking at it as, oh my god, we bottom and we're gonna go higher. I mean, I don't see that, but we'll have to wait and see. That's all I have on the daily chart. Let's take a look at the weekly chart. Here's the weekly chart. We got this downward bias since this January of last year, and looks like the channel is something like this. Fits pretty good against the price action. We have this angle being maintained until about January of this year. Now prices have a decision to make. Are we going to see a break above this 410 level, or are we going to see a long trap occur and then prices to drop down lower? So in the future, it is possible we come back to retest these lows or even exceed it, because this is the first break of the channel. But if we get a couple attempts lower and we fail to reach it, then that's pretty much it right there. So that would be the bears giving it all, and we still can't reach the low, so that's bullish, and we'll probably see a big reversal. As right now, macro picture looks like we can set up, we're below the EMA. It is getting sideways. You can see how the blue line is sideways, versus in the past it was kind of up or even down. Now it's going sideways, so that's what I mean. We're kind of in like a different state of the market. We're in a choppy state. I'm expecting a long trap to occur for price to drop down lower. What would make me change my mind to be really bullish is that we get back above this 410 level with a strong push higher, and then we see a couple attempts down, and then we see it fail to break down again to that 410 level for price to rocket higher. So this is the structure I want to see, but that could take about the rest of the year to play out, or at least Q4. So I wouldn't even expect that anytime soon. What's more likely to occur next coming weeks is if we see a pop up higher and then the drop down lower, or we see the drop down lower right now. Either way, I'm expecting prices to go lower in the coming weeks. So let's see if that occurs. If we just start going sideways, then that will increase the time needed. That would increase the time needed to see that move down lower, but that would not invalidate the analysis. It's just going to take longer to play out if the market just goes more sideways. But either way, it's looking bearish for the SPY. We're closing below the EMA, and this downward channel still looks to be in play. So that's all I have for the SPY this week, and I'll give you guys an update next week Sunday. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised at what you can learn. Leave a comment down below on where you think prices are headed. Also share the video with your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.